Global financial markets are in a state of turmoil this morning, with cryptocurrencies and stocks getting hammered. This is Japan's Nikkei 225 benchmark index, which is down around 13% just this morning. That's extending a rout that began at the end of last week. Meanwhile, so-called haven assets such as government debt and gold are rallying as investors seek safety. Why is all of this happening? Well, it's being driven primarily by fears about the state of the global economy and questions about whether the US Central Bank, the Federal Reserve, is now behind the curve in terms of cutting interest rates. Just last week, jobs data out of America, the so-called non-farm payrolls number, recorded one of its weakest prints since the pandemic, and the jobless rate unexpectedly climbed to above the Fed's year-end forecast. Now, markets had been expecting the Fed to cut rates in September, but given this latest batch of poor data, and the fact that the Bank of England and the European Central Bank have already begun their easing cycles, many people are saying that the Fed have left it too late. And that's exactly the sort of criticism they got about 3 years ago when they were late to start hiking interest rates to deal with what many people were warning was going to be a wave of inflation. Now, at the time, Fed officials said again and again that they expected inflation to be transitory, i.e. just a blip. But the reality, as we all know, turned out to be something rather worse. The market is now pricing in between 2 and 3 rate cuts before the end of the year, and unless an emergency meeting is called, the first one will likely come at the FOMC meeting in mid-September.